Hello, this is Rob Carrick with Carrick Wealth Advisors. Today is Wednesday, July 30th, 2025. And I'm going to talk a little bit about last quarter. Now, yes, I get it. We're 30 days into the third quarter. Isn't this a little late? Well, I'm having a good summer. Okay. All right. I'm getting to it now. All right. Um, The second quarter was incredibly volatile. I'm going to walk through some slides. Source of this information, as always, I will cite mostly JP Morgan Asset Management, some of it my opinion, some of it FactSet, Wall Street Journal, etc. But things were very volatile there, particularly in April. Volatile to the downside, which is the type of volatility none of us like, but then quickly volatile to the upside, which is fine by most people. So it was a good reminder of things that I've talked about on these videos many times before. One is stocks are just volatile. That's sort of the price you pay for what has historically been decent returns in the stock market. Two is diversification can help. I say can because sometimes it doesn't help. I'll walk you through a little bit of that. But recently, I feel like it has helped for sure. And then lastly is politics. A lot of what transpired in the second quarter was driven by politics and the White House specifically. Um, that source of that is, I'd say, the nightly news, but specifically, I will show you the Wall Street Journal. So those are three reminders that are good to keep in mind. And as I always say, no one likes to see their accounts go down. No one does. But different investors and clients of mine react in very different ways. Some people were very upset, angry in the beginning of the second quarter. Other clients of mine just totally roll with it and were very comfortable with what was going on. Some people, tried to take advantage of it. And the key is that the stock market is always going to be volatile. And, if you can't stand the heat, stay out of the kitchen, I guess is one way to look at it. I don't like people to make sort of a binary decision of stocks are for me or they're not for me. More just how much money should I have in stocks? How much of my portfolio can I see drop precipitously like we saw in April of 2025, knowing that the track record is long-term stocks have been very good for most people that wrote things out. So let me share a few things here and go from there, see what we're looking at here. All right, how about this? All right, so as I mentioned, Guide to the Markets, JP Morgan Asset Management is the source of most of this information. I'll let you know when it isn't. This slide I always show, but I'm going to show it again. So you can see, you can barely even tell here, but the stock market went down this much, which is close to 20%, and then has rallied back all that way. Let me give you the numbers there from JP Morgan. For year to date, the S&P 500 index up 6.2 at the end of the second quarter. The quarterly return was 10.9. Now that sounds great, but it was coming off of a pullback. Let me put this another way. Here is an article from the Wall Street Journal, April 30th, 2025. And this article, source FactSet, shows you, let's just look at the S&P 500, the dark blue. We had a little rally the first few days of April, and then a pullback of, if we say this is +2 to negative 12 or so, 14% there in a matter of, a couple of weeks, probably not even. And I'll just show you that another way. Stocks went down 19%. So far this year, there was a peak to trough pullback of 19%. As of this slide here, stocks were up 5, S&P 500 not including dividend, which is a little different, but sort of the same point. So Once again, let's pause on this slide for a second. Look at all these negative red numbers. These were just at the worst point of the year, how the market had performed. And then the bars up top are how things finished up for the year. I mean, most of these things are up top are double digit returns, but the volatility is here nevertheless. Um, Let me talk a little bit about diversification. So over here, year to date, first two quarters of the year, you can see large cap stocks up 6.2. That's what I just mentioned before, the S&P 500, which is great. 6 months through the year, up 6.2. But what really has helped this year is things like international, developed market equity up almost 20, emerging market equity up almost 16. And you can see an asset allocation portfolio mix of all of these. That's all sort of down here in the fine print, up 7. So this has been a year. It's hard to argue that diversification has not worked this year. Now, why do I say diversification works sometimes, not always? Well, if you just owned large US stocks, look at some of these. I mean, this is 2010 to 2024, pretty long period of time. Just that alone was the sector that was up the most, 13.9%. So, that's pretty good. I mean, the green is very often at the top, if not near the top. So I like to see, as a financial advisor who generally manages diversified portfolios, I like to see this reminder that, hey, diversification can help. So to everybody that reached out to us, we really appreciate that. And it's always good to have an opportunity to talk things through. For those of you that we haven't heard from, or we're in the process of reaching out to, we're looking forward to that. But again, I'm going to end where I finished. Stocks are volatile, and they probably always will be. 2, diversification can help and has helped recently. And 3, to the extent that you can, I highly advise people keep their politics out of their investment strategy. It's easier said than done, but the evidence is overwhelming that for those people that can sort of separate those two, in my experience, in my opinion, people tend to do better over time. So I hope this helps. If I can help with anything, reach out at rob.carrig@stewardpartners.com. Thank you and have a great end of the summer.